Stock Trader Network pre-market prep. We have CC Lagator with options Unchained. And here our wonderful star is now CC Lagator, ladies and gentlemen.
How's it going? What was that? Does everybody see that countdown music?
Yeah. Did you like
That was
that? Were you
like a
grooving?
Sergio Leone movie or something. It's really
Yeah.
cool.
I like that it little Josh hooks it up with the images, man,
Yeah,
and
it
the
was the
intro.
countdown before we go
Yep.
into like the techno intro. That was
Did you
pretty
like
dope.
that? I
Yeah,
know.
Ernio Mosconi or whatever was the guy that did all the Sergio Leone movies.
Oh, yeah,
And
yeah.
then a
We can.
little tidbit,
Yeah,
the song Blue Monday by New Order,
of course.
famous dance track,
Of
one of the
course.
first most famous electronic dance tracks. The bass line in that is basically from, I believe, The Good, the Bad, and the Ugly.
Look at this.
So
Look
they
at you,
stole it.
CC. Look at
They
you.
stole it from a Sergio Leone movie.
That's a good little factoid right there. How's your week going?
Good, good. Things getting a little crazy today, I would
Things
say.
are getting a little crazy. I'm looking at S&P 500 futures or the SPX trading down 0.75% this morning. Market is kind of just barely off the highs, but it feels like there's so much carnage out there. We have a tech wreck going here. We have a darling wreck going. We're looking for a little safety in names like Walmart or Apple. Somebody in the STN room the other day was pointing out that the diamonds, the DIA Dow Jones, is hit all-time high yesterday and matched that this morning. And we have a VIX over the last hour or two here that has moved over the 20 level. We had a little news here. Iran nuclear talks, Axios report. I actually have the report here if we take a quick look at it, see if I can pull it up real quick. Axios report that plans for the Iran nuclear talks are collapsing, according to U.S. officials. And that was the move lower that we saw around 12:30 or so p.m. Eastern time. And that was also right around where 6,900 was in SP 500 futures. So I don't know if this was the most concerning headline. There was a senior Iranian official who said that Tehran is fully ready to hold talks with the U.S. only on the nuclear issue. I think that the issue with the talks, according to Axios, was the location. So I
Yes.
don't know if that's the worst thing to disagree about. I feel like they can find some neutral. Hopefully, they can find some neutral place to discuss.
Yeah.
What have you been thinking about the market today, CC?
So I don't, that is actually adding, I think, a little bit to the confusion. It's funny you mentioned the diamonds. So I'm on a text thread with some friends. Somebody hit me this morning. It's like, is it time to buy these software stocks? What about the chip stocks and everything? And I was like, it's tricky, right?
Catching
Um,
the falling knife, could you say?
yeah. And then I went back to the thread like sort of midday when things feel pretty sketchy. And I said the market feels really sketchy here. And don't you dare bring up the Dow, because I looked and the Dow was green when I sent that thing. So you have all these cross currents, like, you look at the sectors that are higher today. It's like, it's kind of ones you don't necessarily want higher. It's like energy, consumer staples,
Yeah,
what do we got? Like
utilities,
healthcare.
right?
That's, but yeah, it's like energy, materials, right?
Yeah.
And the financials are up, but tech is getting absolutely destroyed.
Hmm.
So this market feels like, look at that little bounce, like that bounce that just failed, right? That
Yeah.
we're looking at that chart right now.
Yeah. Yep.
So that just tried a rip that the market has tried and actually kind of pulled off to some extent the last, I would say last week, when we have these big down moves where we're down more than like 1%. You get these like late day rallies and you're like, oh, that felt really bad. And then the market was only down, 0.5% or 0.6% or something like that. But that one just happened. And I was like, I feel like this one's going to fail. So things just seem darker right now over the last couple of days. And all we have to do is look, at, say, Palantir's reversal, right, from yesterday. So this was like software was still getting killed yesterday. I don't know if you consider Palantir a software stock, kinda. It's more like a spying stock. I don't know what sector they're in. But that reversal off of that earnings bounce is pretty nasty stuff. And then you look at AMD today and you're like, oh boy, right? So you look at this AMD chart, look at this right now, testing this like gap higher range.
Yeah.
That's pretty nasty stuff.
Yeah.
And of course is bringing down Nvidia and all, but like look
Right.
at Broadcom, right? So Broadcom's down 7% today. This is a massive market cap change, and it's like this is on AMD's news. Like
I don't know. It feels like more is happening out there.
That's what I mean. So things are getting kind of nasty out there, and I think you're seeing it a little bit. We talked a couple of weeks ago we had sort of when you're entering a stage of potential volatility in the market, and you could argue we've just failed basically at the 7,000 level enough times to get worried, right? We were not able to get above that 7,000 SPX cash. I think we tried one day last week. Let me just go back.
7,228.
Exactly. Like you look
on Wednesday morning.
Yeah, you look at this like 1 month chart. Like look how many times. 3 months. You want to go back farther. It's like that's a little disturbing if that ends up being kind of like it tried a couple of times and then this third time's the charm to the downside, maybe.
Right.
So we'll see, but it definitely feels a little sketchier today. And I would say that the VIX conversation that we had a couple of weeks ago on the show, when we first got that VIX spike up above 20, and we sort of said that tends to be when you see the VIX go from 16 to 20 or 21 or 22, it tends to be a near-term buy signal, and you're going to be right more times than you're wrong, right? That's normal market action. Market pulls back a couple of percentage points, VIX spikes to 20. Everybody's like, it's no big deal. That's not the big one, right? What happens is once you've seen an initial spike in volatility, every subsequent test of that vol regime and the tests to the downside, you kind of need it a little bit more. And today we have the VIX we're above 20. What are we at right now? We're at 21, basically.
2070.
No signs that that's a buy signal, right? And this is what I'm talking about is that like 2 weeks ago, the VIX at 21, you'd be like, you can probably step in here, buy for the next couple of days and you'd be fine. Not today. And so we'll see. I mean, we could bounce into the close or whatever, but I'm just not seeing it on a day like today. And I think this is setting up to be more like the type of thing where you're going to need to see the VIX up at like 28 or, approaching 30 before your next like sort of no-brainer, I'm going to buy stocks today type signal.
Pretty far away from that level here right now.
Well, but it could happen in a day, right? And the way that would play out is you see, like look at this 3-month chart. We're at 68, 60 right now. If you went down and even tested like this low from like December, or even I would say this late January low, what is that, 6,800? If you went down like this afternoon and tested this 6790, you broke through 6,800, you'd probably see the VIX up at like 26 today, right? And that would be like an acceleration of today's selling. And then you kind of we're getting to a point where you kind of have to back the charts up a little bit, because if we do a rollover like this in November, that was a 5.5% pullback, right? And so if you're going down 5.5%, you get to a very interesting level. And I was going to wait to talk about this later in the show, right? But if you're
Go for it. Yeah.
okay.
Yeah.
So we've talked about this on the show before. There's a couple of things. You can look at moving averages. You can look at, a bunch of things, like when you're like, all right, if we do roll over here, how bad can it get, right? And sometimes those moving averages line up with very specific things that I'm seeing in the options market. And we've talked about like the big institutional options positioning that's quarterly, right? Like JP Morgan has a massive SPX collar that they put on every quarter.
Yeah.
And then a lot of people pile on around those levels, is sort of using it as like a risk range, right? And so that JP Morgan put level to the downside in expiring end of March, right? That's the end of the first like 3 months, right? So that March 31st level for that JP Morgan collar is 64.75, right? So everybody write that number down. And the reason that it's kind of interesting is the 200-day moving average in the SPX right now is 64.53, right?
Oh, what do you
So
know?
you have a 20-point area down there in the SPX, right? And the options market is almost pricing that exactly. So I'm on March 31st right now. The options market has an expected move to the downside of, call it 65.25, but it's really just round it to 6,500, which is just above that JP Morgan put part of their collar.
Yeah.
And it's just above that 200-day, right? And so that is, if you are a little bit worried about what we're seeing the last couple of days, that is a very interesting level to look out for to the downside. Because if I was looking at this chart and I'm like, all right, I'm getting kind of nervous here. I don't feel like, I mean, we can get into different length of time hedges or whatever, but if I was looking to do something to the downside as protection or anything right now, I would be looking out into March, and I would be looking down to that 64.75 area. And it could be put spreads that start at 6,700. Maybe it's a 67. Let's do some. You ready?
Okay. Yeah.
All right. So let's go out to March 31st. Where are we? March 31st. And let's do a put spread. And let's do just big round numbers so we can all remember them.
Okay.
So let's do a 67. This would be easier if I just do it this way. 6,700, 6,500.
Okay.
All right. So that, let's just back it up on the chart so we can see it. So that is essentially to that level. That's a 250 wide SPX trade, right? Costs you 5 to make up to 20, right? And so like this is the kind of thing I would be looking at. So this is not that aggressive, but fairly aggressive, right? So this is basically saying, I think we're going to go down and test that 200-day, right? And I think it's going to happen in the next, month and change.
Yeah.
This is the kind of trade I'd be looking at if I was looking, as a hedge or as like a bearish play. Because basically, if you just had like 2 more days down in this, like if you even went to 67, like if you went to 67.50, like your long strike, this thing would be, you'd pay 5 for it. This thing would already be worth like 7 or 8, and you'd have, some sort of, optionality down there. What you want to do with a trade like that.
Yeah.
We could look at the same thing in SPY or whatever. I would say in Qs, that is arguably the more interesting one, just from like a sort of alpha standpoint. Is, if you saw, what did we say, March 31st? That in the Qs, the expected move is about 7% lower from here. And that's after the destruction of the last couple of days. That's how much vol has sort of popped. So in the Qs, you'd be looking at something that maybe resembled like a 575, 550 put spread, something around there where you're getting down to like, how low could this go? Could it go down to 550, 560? Does it stop at 575? But that's what I'm looking at. Like if we do roll over here, you're talking, there still would be some pain. And even in like the Qs, we're not that far off the highs. Like look at this. In just in the last week, what are we? It's like 5% the Qs, right?
Damn. Yeah.
It's been brutal.
Yeah.
So, and that's Microsoft. That's Apple really hasn't done much, but that's like all the software names. It's like stuff's getting kind of killed.
Meta down 3% today.
Meta is not. I was about to say, I was like, that's despite something going higher on earnings. It was Meta. So I mean, like, look at this, dude. Like, I mean, that's ugly. What was I looking at something earlier? Like, you want to look at like a 5-year chart? Look at HubSpot. I mean, look at this. It's below these 2022 lows. This is when the market got murdered in 2022, and it's below those. So there's some carnage out there.
Carnage.
Yeah. And you're not seeing it in the SPX because you've got all of this other stuff like energy stocks going higher, like IWM, the regional banks. Like, what the hell is going on in IWM that this thing was like breaking out the last, like 2 weeks ago, and it was showing relative strength the last couple days. There's a lot of funky stuff going on that has not appeared in the S&P 500 yet because there's been so much like divergence within the S&P.
Right. I like to look at the KRE for the regional banks. It's up almost 2% today.
Exactly. So like, and this is a huge part of, man, that's crazy. This is a huge part of the IWM, right? So that kind of explains, like, I was watching the IWM the last week, and I'm like, man, every shitty little tech stock that I own is going like 50% lower over the last couple of weeks. How is IWM going higher?
I know, right?
And it was like stuff like this. It was KRE and everything. So I don't know what that's signaling anymore. At the beginning of the year, it was rotations. People were still rotating out of mega cap tech, and they were moving into like smaller cap, and they wanted, performance for 2026. I don't know how to explain, IWM anymore other than things like regional banks, but it's getting hit today.
Mm-hmm. So. Just like conceptual a little bit here, what they hit yesterday in the software was like the travel software names like Booking and Expedia.
They got wrecked.
They got wrecked, and it's just it makes sense, but it's just so surprising when you look around and see the extent that this carnage has spread.
That's an interesting one. So you and I were talking, Brent and I were talking right before the show about music. No, did we hit music today? I don't think we did. But I was talking about how I'm messing around with the Claude code and that whole world, right? And if you have not, and everybody like kind of put in, because I'm messing around with some options stuff, and if people want to like ask me for like particular things, I could maybe produce them.
Okay.
It is kind of amazing because once you're in there, and it's not perfect, and you still kind of got to know some details of when you're building these apps. But man, you look at some of these stocks like Salesforce or that HubSpot we just looked at, and you're like, man, they are cooked, right? Now, I don't know if they're cooked, but I know why they're selling off after you use that stuff.
That's a really good way to put it. Absolutely. Yeah. Like you're like, this is over my pay grade, but the market is showing us this is what it thinks.
Totally. And you have to, and there will be winners in that space, right?
There's gotta be. Yeah.
The companies that sort of complete the pivot in their business model to from we're going to sell you software at $10,000 a month right, for your
Yeah.
company,
Yeah.
to we're actually going to provide you with a bunch of tools for $7,000 a month. They're going to take a hit either way.
Right.
But you guys are going to like literally have full control over this suite of products, and you're going to be able to customize it so much more than you could beforehand. Oh, how are you going to do that? No, it's not your engineers. You're going to have
Hook it into your
you're going to
agent,
have
right?
people literally telling it what you
Yep.
need in plain English. And that's what's kind of
Gotcha.
wild with those names, is like there
Yeah.
will be winners, but man, that you when you use that stuff, you know why those stocks are getting hit right now. Because you're like, I could build some of these services in,
1 minute.
you can have your MVP, your first version, in 10 minutes. And
Literally
then you spend the next couple of days tweaking it.
tweaking
But
it,
like,
right? Yeah.
yeah. I mean, the vibe, what are the kids calling it? Vibe coding?
Oh yeah, the
Yeah,
kids. You would know. You're way hipper than I am.
vibe coding. Anyway, back to the market. Well, that is kind of the market. Like, just sort of, if you're watching your SaaS stock that you own go down 50%, it makes sense when you use some of these new AI coding tools. So let's get into show that card for the next week, because this will sort of speak to the pop in volatility.
Okay.
So we do this every week. I actually had the first one I sent you this morning, Brent, was the market was higher, but all of these numbers you see, all those 1 day expected moves, all those 1 week expected moves, except TLT and gold, that hasn't really changed much.
Okay.
But all of the stock indices were much lower, and they were basically very similar to the card we did last week.
Yeah.
And then you saw this like second leg lower when we broke 6,900 again,
Yep.
right?
Yep,
And
exactly.
all of this stuff popped, and you're not really seeing it. Like, even though the market stabilized today, you're not really seeing any reaction. Like, people are now a little spooked. And when you see a 2% expected move in the SPX, or a 3% Q's expected move, obviously that has to absorb Google's report tonight.
Sure.
But when you see those kinds of numbers, you're kind of on your way to seeing some craziness, right? The options market definitely got spooked today more than it had over the last week or so.
Mm-hmm.
And I'm talking about, not only you're seeing it in the VIX, but remember the VIX is a 30-day window, right? It's a 30-day moving window of like looking out over the next month of volatility. If you look at SPX options and Q options, you can see the next few days, you can see next week, those all popped today. And that's what you're seeing here. And what that means is all of the risk, the sort of risk ranges have expanded over the next week. The possibility of where the market can go has expanded. So we were mentioning the Qs, like look at that lower expected move in the Qs. You're now down into the 580s in that thing, right? And so that's what's saying, that's what the market is saying right now, is like, this could get uglier. And these expected moves generally are very conservative, because they have to account for the fact that you could go down 3% and then bounce, right? So they're sort of on the conservative side. So when you see a 3% expected move in the Qs, that's more like the possibility that if you just went in one direction, it's more like 5%, right? So
Gotcha.
if we just went straight down, or if we had a massive bounce on Google, and which I doubt is going to happen. I don't think Google's enough to sort of rip us to new highs. But that means, like, when you see a 3% expected move in the Qs, that means like you could have a 5% move if every day was in the same direction over the next week, right?
Right.
Because you can do the math. That 1.1% 1 day Q move, if you had 5 of those in a row, you're over 5%, right?
Yeah.
So that's the way I like to think about those expected moves, is 3% is
Okay.
the betting math. But when I see a spike like that, I know that a 5% move is possible, if that makes sense.
Yeah, I think that makes sense.
So anyway, that's what's happening today. And it's sort of like, that's why the tone of this conversation is sort of like that. We talked about potential hedges. I would say, do the math down to that 64.75 level in the SPX.
Yeah.
And what that would correspond to, like in some of your stocks, in some of your, like in the other indices and the Qs and things like that. And that's where I think if we do go lower and this spills and Google misses tonight, or even, not misses, but the reaction is the same as like Palantir.
Yeah.
That's probably our big first test over the next couple of weeks.
Yeah, sure.
Or, this is another head fake and the VIX is at 21 and we bounce. But like, I don't know, but I'm just saying like that's the level I would be watching to the downside. If we go lower today or the next or tomorrow, we're going to go down and test something, right? We're not just going to keep bouncing like we've been. And because every time we go higher back up to 7,000, it fails. Like how many times does that need to happen before, people just throw in the towel, right?
Yeah, totally.
Yep. We have got a couple of questions. Let's look at Google real quick, right?
Yeah, okay.
So Google reports Alphabet, whatever
you call it whatever you want tonight.
Whatever they renamed it to.
Time. You want to know a time? I'll look for a time if it matters.
I just got over calling Facebook Meta. Like I just got to the point of calling Facebook Meta right as they ditched like their whole stupid metaverse thing, right?
Of course.
Like what a bad rebrand that was. I mean, I guess I don't know.
So we had a guest on yesterday, I think, saying that exact word, that exact phrase. What a bad rebrand.
They renamed the entire company to something that didn't end up being a thing, and now they're in the middle of like the AI thing. They should have done Facebook.ai. All right. So Google's expected move tonight, you can see it, 6.2%. I want to say I think this is fairly big historically for Google. Let's go look how this thing's moved in the past.
Like this quarter, the fourth quarter, you're saying?
Yeah. So
yeah, I bet.
All right, it is big. So I just saw the vol number on here and it's 110, and I was like, that's pretty high for Google. All right. So in October it moved 2.5%. In July it moved 1%. In April it moved 2%. You have to go. Last February was its last big move. I don't know if there's any seasonality, but that was down 7%. And then it's had back in 2004, it had some big moves, like April, like 10%. But over 6% is a big move, a big expected move. So the options market's a little spooked here, I would say.
Yeah.
If you look at a 1-year chart, obviously to the upside, that call it 350 to the upside. If like the expected move to the upside, it's a new high. To the downside, you're kind of in a little bit of no man's land. You're catching a little bit. You can see it right here. That's about call it 310 to the downside. So let's just say it's a 20-point expected move in either direction, which it is. So 20 points to the downside only really gets you to, these levels right here. I'd be very nervous about, this thing. If it's going to 310, I'd be very nervous of it testing 300. So I think we're probably a little bit underpriced to the downside. To the upside, I don't know. Like, let's look at what Meta did after they reported. It's a different situation because Google's really the only Mag 7 stock at its highs into earnings, right? So, but man, look at this. So Meta had this move on earnings. We've completely filled in. It's back below, I think, where it closed, or it's right at where it closed, right before that earnings pop. My hunch in this market, my hunch would be you're pretty safe in Google to the upside if you were like selling the move or something. But I would not be paying for options up above 350 right now. You might be right until tomorrow, but I wouldn't have them past anything expiring tomorrow or on Friday. I mean, so call it 352 to the upside, call it 310 to the downside. I think the risk to the downside is that if the reaction was nasty, you're definitely testing 300. And you look at this low, and that was basically 297.5. So that's where I am on Google. So if you are long this stock, I think my hedges in this would probably kick in somewhere around 300. I wouldn't do tomorrow, or Friday, it's too binary.
Yeah.
But I would be going out to go out to that same March expiration, and let's look at March 31st or March 20th is the monthly expiration out there. I would be looking at something that expired. Why isn't that working? There we go. Let's say 300. And how deep do we want to go? All right, let's just look at a 1-year chart where you would want protection to. All right, this is a 300 250 put spread. I do not think Google is going to 250, but I just thought it was kind of interesting because you're paying $6 for the 300 put and you're selling the 250 put at $1. This is a less about Google's earnings and less about Alphabet as the company, and more about if the market rolled over, where would I start getting nervous in this stock? It's certainly at 300. And I would want protection below 300 so that I wasn't panic selling this thing at 275. Does that make sense?
Yeah.
So if I was long Google and getting super nervous given the recent events of some of these other Mag 7s and what we've seen in some of these, even like the AMDs of the world, this is, you're paying $5, you're protecting up to like $45 in a move lower in Google, and you have almost 2 months, of protection.
Right. I'm expecting Google to be out around 402.
They're real quick.
Yeah, right after the close. So
and
that's
by the
nice.
way, just some nerdy trivia.
Yeah.
If you look,
I like nerdy trivia.
All right. So the SPX is cash settled at 4 p.m., right?
Yeah.
So the expected move in for the rest of the day in SPX is 0.3%. SPY options, which expire at 4:15, is almost 0.5%, right? So the SPY options expire after Google reports. The SPX options expire before Google reports.
Oh, okay.
And so you have to be very careful on a day like today that if you are in SPX options, your positions, it's done at 4 p.m. It's cash settled, everything like that. If you are long or short options in the Qs especially, this will have a massive all the premium will still be in these options. The Qs expiring today. They'll go into 4 p.m. that way because they're going to react to Google's earnings. So the expected move in the Qs for the rest of the day is like it's almost like 0.7%. It's over 0.6%. That will probably still be 0.5% at 4 p.m.
Right. That's such a good
These options will not decay. If you want to do some options in closing Qs, they will not decay.
Wow. Okay.
So
good heads up. CC, we had a real good question from Prad on gamma flips and put call walls, but you also had the rescues card. I don't know if we're gonna have time.
Let's save the rescues. We'll do that. We'll see how that goes on Friday because we talked a little bit about it last week. So gamma flips real quick, and then I've got to hop because I've got to
good, man. No, yeah.
So on the gamma flips, I'm sort of torn how to explain this. So the intraday 0 DTE stuff is changing so fast during the day. And I see a lot of the services, and some of them are, I can't help but peek at some of them sometimes, that are really like kind of showing you like, like all the, like the shading of like how gamma would change through the day and things like that. But like if you're looking at something and then like an hour later, you're like making trade decisions based upon that into the close, it might have already changed. And then you're like, oh shit, what do I do now? Right? Everything I thought was going to play out has changed because all those positions have closed or, So 0 DTE wise, I think I'm sort of old school on this. I would be looking at the open interest coming into today, because that's the one that is going to be most persistent into the close, right? So, open interest still matters in this stuff, and it really matters the farther you go out, right? I don't think anybody has a huge handle on just how much volume is happening in 0 DTE and SPX and what it's doing to the market. But what I can say is, what I use 0 DTE trading, like if I have options positions expiring that day, I'm looking at the open interest coming into that day. I might take a peek at the volumes, like what Prad's getting at. The way I'm thinking about those areas is, if it's a big put strike, right, below, and you don't even need like to pay somebody $200 a month to know this. In general, down below where the SPX is trading, you can almost assume that all of that put open interest is the market makers are short those puts, right? That's people buying puts from the market makers. That means when you hit some of those big open interest levels in the put side of the chain, it might accelerate the sell-off. So if there was a massive put position expiring today at, like, say 68.25, and we went down to 68.25 into the close, it might accelerate us right through it. The same assumption can be made to the upside, is if we go up to 6,900 today, you might see, depending on, kind of, I would doubt we would accelerate through that 6,900. You would actually see it as a moment of resistance. Whether you break through that, then you can see the acceleration, but it will be like a first moment of resistance if we go up to 6,900. And I'm using that in sort of, I'm using those side by side with the moving averages that are changing throughout the day, right? So I'm looking at the 1 minute moving averages. I'm looking at the 5 minute moving averages. If you're having a really big move that day, I'm looking at the 15-minute moving averages, and I'm looking to see where those are all comparing to some of these big open interest lines.
Okay.
And we can nerd out about that more like on Friday.
Okay, sweet.
Yeah.
Awesome. And then maybe we can also, I imagine the rescues strategies maybe we can talk about on Friday if you won't.
Yes. And so that would be like, what do I do if this just happened to me and my AMD and my cost basis is up at 250? What do I do? Right.
Yeah, okay.
And so that we'll get into that. A little tease for the STN room.
Yeah, that was
we can get into that. There's ways and options where you can do something, and you don't want to add insult to injury. You've just gotten you've just gotten wrecked. It's like, what do you do? What can you do so that if AMD bounced back to 220, you could get out of this thing for like not much loss or even? And we'll talk about that on Friday.
Awesome. Great tease.
Whoa.
Awesome, CC. Well, thanks for your time this afternoon.
Yeah.
Hope you have a good rest of your day.
We need outro music.
We can run the intro as the outro. You ready?
No, okay. All right. Yes.
It'll be cool. Watch. It'll be cool. I promise. Watch.